Good morning and welcome to the Video CPA. It's good to be with you again. I'm Michael Scott. I am your host for this channel where we talk about taxes in certain areas of business and personal taxes as well. So today I had a request from a subscriber to revisit marijuana a little bit, and so I'm going to do that. That does not mean that I am a proponent of marijuana, or does it mean that I am an opponent of marijuana on marijuana businesses, but I just want to, it is a tax-related subject, and so I just want to relate some information about it, okay, additional information. All right, so today we're going to talk about the legal status again. We talked about that in the first video that I did. Taxable revenue, which is pretty straightforward. Expenses, a little bit different than other businesses. We did touch on that, and there's some special situations. So let's get into it. You can see our disclaimer here for our marketing, disclaimer, educational disclaimer. So at the current time in the United States, we have 18 states where marijuana sales is fully legal. We have 26 states where marijuana sales are partially legal. And in those states, the majority of those are for partially legal for medicinal purposes only. And then we have 6 states that are fully illegal for marijuana sales. So just be aware of that. If you're in a state, I just looked that up. There are a lot of maps on the web that show the United States by state and show which ones are legal and which ones are illegal. So that's not hard to find, and I got this from DISA.com, who has a map just like I'm talking about. Okay. Now, a number of states have decriminalized marijuana, and I thought, well, what does decriminalization mean? And so this is basically what decriminalization is. It really doesn't affect taxability of marijuana at all, but a bunch of the states have decided that they're going to lower the penalties for marijuana users that use in small quantities, as opposed to those that are growing and distributing marijuana. So if someone in a state that's decriminalized marijuana gets caught in possession with marijuana, and it's a small amount, they are not subject to criminal penalties, but they may be subject to civil penalties, which basically means a fine or a ticket or of some kind like that. Okay, so the intent there is to let people use marijuana to some extent, but to punish the big growers that are growing in large amounts. So that's decriminalization of marijuana. 34 states currently in the United States have got laws on the books decriminalizing marijuana. All right, let's talk about taxable revenue. This is really easy because the IRS just tells you that revenue from any source in the United States is taxable. And then, there are a few exceptions to that, but regardless of the source, it's taxable. So if you're selling marijuana or any of the products coming from marijuana, that is a taxable sale, and you've got to report that for income tax purposes, okay? And that's true even if you're fully in compliant with state laws and stuff like that, all right? It is taxable for federal tax purposes. All right, deducting expenses is a little bit different, and in the first video that I did on marijuana, I talked about this a little bit. Internal Revenue Code Section 280E basically says that if you are running a business that is selling or dealing with controlled substances, that you're not going to get any deductions, all right? And marijuana is considered a controlled substance by the federal government. So what this means is they're not going to give you any deductions, and when I say deductions, I'm really talking about your general and administrative type deductions, okay? So if you're trafficking in marijuana, just know that administrative and general expense related to those sales are not deductible, and that goes for marketing expense, advertising, sales expense, all that type of thing. It's not a deductible expense for tax purposes. But let's don't do the but yet. Here are some examples of what I'm talking about. Advertising, auto expenses, and this would be other than the production of the marijuana. If you have expenses that are directly related to the production of the plant and the product, that's a different situation. But if you're just selling, if you got general administrative expenses like advertising, selling expenses, labor that's just manning a counter that's selling the product, office supplies, telephone rent, insurance, interest, utilities, all that stuff is not deductible for federal income tax purposes. All right, so here is the caveat. 280E does not prohibit participants in the marijuana industry from deducting properly figured costs of goods sold. All right, so let's look at cost of goods sold a little bit. Now, cost of goods sold are those items that are directly related to the production of that product. So if you've got to buy seeds, those would be deductible. If you have labor out there in the field to plant that product and take care of it and water it and stuff like that, that's fully deductible. Any other supplies and materials, buildings and stuff like that are fully deductible. Equipment, fully deductible if it's directly related to the growing of marijuana, okay? Now, if all you've got is a dispensary and you're not growing marijuana, you're not doing anything other than just selling it, you don't have any, you don't get any of these cost of goods sold expenses really. But if you're in the business of actually growing the product and maybe storing the product, you could get some of these benefits. And if you've got a business that's a full stream type business and you've got one building where you're growing the product in fields, you're bringing it in and storing it and drying it, and then you're selling it out the other end of the building, then you've got to do an allocation of some sort on that building as far as what's deductible and what's not. So certainly the part that is related to the production of the product would be deductible, but those things selling up front at the front desk would not be deductible. And so an allocation has to take place in that sort of arrangement. All right, so let's talk about some special situations here with marijuana because they can get a little bit stickier. So, especially this first one. Okay, the IRS does not consider, and I'm just going to read this, growing and selling substances with a THC level of 0.3% on a dry weight basis or less, a controlled substance, okay? So if that's the case, a business like that can deduct administrative and general expenses just like any other business, all right? They're not restricted to just cost of goods sold. So for example, if you've got a CBD, if all you're doing is extracting CBD from hemp, well then you can write off all your expenses because a hemp business doesn't fall under Section 280E unless, of course, in some way the THC level is very high or something, but is over 0.3% anyway. But it doesn't matter if the CBD is extracted from the cannabis plant. Well, then they're not going to be deductible. Your general and administrative expenses will not be deductible. And that's regardless of whether it meets that 3% requirement or not. And I'm not sure why that is. I think it just probably would be very difficult to enforce because CBD extracted from the cannabis plant could have various levels, various THC levels. Many of them may be more or less than the 0.3%. So if it's from the cannabis plant, you're not going to be able to take your administrative and general expenses. If it's from hemp, the hemp plant, which is a plant similar to marijuana, you can take those general administrative expenses in most cases. Okay, so realize that. All right. And as a marijuana business, you're a cash intensive business, you're going to get audited. Just plan on it, keep good records, retain those records for at least 7 years, and just plan on the fact that you're probably going to get audited because you're cash intensive and you need to follow that cash, okay? If your business accepts or uses cryptocurrency, be aware of the tax laws governing those transactions. I've got several well, really, I've only got one, I think, and then I've got one on cryptocurrency tax software. But the rub comes in, I mean, if you accept cryptocurrency as a payment, you've got to keep a basis on that cryptocurrency because that is a property. And when you sell it, you've got a capital gain or loss, so you need to know what your basis is in that cryptocurrency, and so you need to keep records as to what your basis is for that cryptocurrency, or you're going to be in trouble. You can't just take it in and then sell it and not claim it or something like that. Okay, so that's something that you need to be aware of. Be aware of beneficial owners who are eager to invest in your business. You need to make sure you know who you're doing business with because you could have somebody that is trying to launder money in the drug trade, and if that's the case, you may very well get your business shut down. So that's another thing to worry about. And then file your tax returns on time. As a marijuana business, you're not different than any other business as far as payroll taxes goes, as far as self-employment taxes go, and as far as estimated taxes go. You need to make all those on a timely basis, or you're going to get penalized just like any other business. So those are some of the special situations. Make sure that you do, if you want to avoid penalties, file your tax returns on time, and just count on the fact that you're probably going to get audited. You may not get audited every year, but you're going to get audited sooner or later in this type of business. So anyway, the marijuana business, a very interesting type business, and it's certainly not one that I'm going to get into. But a lot of people are very attracted to those types of businesses, and it's a big cash business. It's got a real possibility for good income, and so I hope you've enjoyed this video. I hope you understand the tax ramifications of being in that type of business a little bit better. And thank you very much. I'll be back in a week or two with another video on taxes. If you haven't subscribed yet, hit the tax button. If you like this video, give me a thumbs up. Thank you very much.